So now we're getting information that this sickness is now the third leading cause of death in the United States, and it is surely climbing and, of course, create worse of an economic impact. Continuing the conversation from the previous video, we, of course, have Tim Pritchett, the Liberty Advisor, going off the latest, most important details happening right now. And, of course, there's a lot of them as stocks are facing the worst outlook since 2008, and many people saying that this next economic tsunami might be even worse than 2008. But so far, stocks have been opening up flat after huge unemployment numbers. Again, still unemployment numbers that we talked about in the last video that are going to be a lot higher and probably are a lot higher now. But again, with half of the world on lockdown, the projections are bleak to say the least. U.S. auto sales have plunged to its lowest in a decade, and many people are saying the worst is still to come. But oil, surprisingly, is doing better after the latest announcements and major geopolitical moves by Donald Trump, which, of course, involve the big energy war that's happening between Russia and Saudi Arabia right now. Tim, what's your take on oil stocks soaring right now after Trump's latest announcements with this larger geopolitical picture in front of us?
Thanks, Luke. And so one of the big issues with oil stocks isn't even necessarily so much to do with oil stocks as much as it's to do with the oil bonds. And so if you take a look at and even the bond market is a much, much bigger market than the stock market. And so the bond is you lend money to a company, and then that company then uses that money to then grow itself. Now, the problem is that is a gigantic house of cards, and these companies are all highly over-leveraged. Now, when you take a look at the junk bond market, and particularly take a look at the absolute worst of the junk bond market, which would be the triple C-rated bonds. And so we have an article from the Financial Times of London from just a week or two ago. Energy companies account for the bulk of debt in the broader high-yield bond market, which is a euphemism for a junk bond market, and comprise 13% of bonds rated triple C, the very bottom tier. So a lot of this has to do with the fact that if these, with the low oil companies, with the low oil prices, a lot of these companies can't make any money right now. And actually every drop of oil they produce, they're actually losing money on that. So there's no way they can, have, I don't want to say print more of it, because I'm looking at all the Feds are printing money. So as they drill for more oil, they're losing more and more money. And so it's this whole, carousel that keeps going round and round. Now, a lot of this tension really kicked off around September 17th, right around the same time that the financial markets kicked off, that's when the whole repo apocalypse happened at the exact same time. But that had to do with, at the time, there was this, supposed Iranian drone strike, and then it went, and then that sent the price of oil higher. And lo and behold, that was the exact same time that Aramco, which was a Saudi Arabian oil company, that they were going to have their initial public offering. So then they got to make a ton of money on the way up. And then now that they, have already made a bunch of money, they decided that, hey, now would be a very good time to, have this energy war. And then the energy war would result in certain layoffs and consolidations, where then the people who have money can then come in to buy up the companies that have already that have already gone out of business. But in this case, it sounds like there is a little bit of a truce that is going on. And to me, it's not so much the stocks, it's the bonds. And the stocks are going up because now there's a greater likelihood that the bonds will be paid. And I guess it is a little bit of a complicated subject, because the bond market isn't sexy. Nobody's talking about the bond market, really.
I still don't know what it is. But sorry, just cutting you off really quickly here. There was even just talks just a few days ago about a potential energy company bailout, as of course, just 3 days ago, a barrel of oil was cheaper than a pint of beer in Canada. Now, of course, beer is heavily taxed in Canada, but that's a whole nother kind of criminal enterprise to unfold here. But again, Donald Trump did tweet as of just a couple moments ago, saying officially, quote, "Just spoke to my friend, the Crown Prince of Saudi Arabia, who spoke with President Putin of Russia, and I expect and hope that they will be cutting back approximately 10 million barrels and maybe substantially much more. If it happens, will be great for the oil and gas industry." Yes, it will be great for the oil and gas industry, an energy industry that's subsidized and has a lot of government intervention. But at the same time, Also, it's going to increase the price of energy to the average consumer as well. Now, of course, we've been getting away with very, very cheap oil prices because of this kind of larger energy war between the geopolitical foes, with, of course, the United States being hand and lockstep and barrel with Saudi Arabia and their petrodollar. Russia and all the other countries, of course, going against the petrodollar, with China, of course, with Iran, of course, and this is very interesting to unfold because we haven't officially gotten confirmation from Saudi Arabia and Russia that this is happening, but Donald Trump is saying that it is. So we're going to see how this unfolds, but this definitely does provide some perplexing kind of understanding of what's happening here, to say the least.
Yeah, no, and one very important point that I want to make about that is, especially if we go back to the screen over here with Donald Trump, and he says he spoke with his friend, MBS, the Crown Prince. We can get into all that of how all the stuff that guy's behind. And however, when he says this will be great for the oil and gas industry, I mean, this is who, really, when we say make America great again, what do you mean by America and what do you mean by great? I mean, so just take a look at. We actually, Josh Seegers and I did a video right at the market peak where we had stated that 67% of all the S&P 500's earnings at the time had to do with MAGA companies. So that was Microsoft, Apple, Google, and Amazon. And here it seems like the MAGA, industries over here would be the military industrial complex is probably going to benefit from all this. The banks are going to benefit from all this. Big pharma is going to benefit from all this. I'm sure they'll want everyone to get, vaccines. You got Bill Gates, talking about, hey, let's go get your little tattoos, and then the tattoos will then let you know if you can even go and travel. And so this is, we're heading to 1984 real quickly, and to see Donald Trump taking victory laps over, now we're going to help save the oil and gas industry. Well, save it from whom? I mean, it's not like it would go away. It's not like if we didn't. So now the millions of Americans who are out of jobs, Americans who are struggling now just to make ends meet, that we're supposed to help them out by making sure that the price of oil and the price of gas and the price of their energy costs more. I mean, it just seems like a ridiculous notion of why the average person should be taking some huge victory lap on the fact that everything they buy is now going to cost so much more money. And this is all being used, in my opinion, to fast walk us into some 1984 scenario that's just on 30 years delayed over here. But it's just for me, it's always been the bond market is the bigger issue here. We've got the auto sales have been plunging to lowest sales in a decade, but they think that the worst is yet to even come. With the oil, but who knows if this is just
and it is. And Tim, sorry to cut you off. The worst is still to come. Many people again had very high optimistic viewpoints that somehow everything would go back to normal on Easter. And again, I was calling it here like, no, like you have no idea the reckoning that you're dealing with right now. And another bigger point to understand here is that even if this sickness didn't happen, even if this sickness wasn't here, like it wouldn't just be what would lead to the crash. It would have been something else that would have led to this crash, because it was an economic reckoning waiting to happen based on so much irresponsible behavior that, again, we can't just always just look at the virus as an excuse here, because all these things are bringing all the underlying issues to the surface that finally we're like, holy crap, we're standing in a bunch of crap. Why are we standing in a bunch of crap? Not because of this new sickness going around, but this crap was laid forward by a lot of the individuals that people trusted the most to ensure our market. And again, what's happening in the market is just absolutely insane. Would you say you disagree or agree with that kind of latest statement?
I'd say completely agree. 110%. Humpty Dumpty is broke. They're not putting Humpty Dumpty back together again. We're taking a look at John Snison's website here, taking a look at the Federal Reserve balance sheet. That is a complete straight vertical hockey stick. There's no way we're ever coming back from that, and there's no way the Fed's balance sheet's ever getting back to zero like they tried to pretend over here. And the pace at which things are moving is insane. We talked about this in the last video, but the Fed has eased capital requirements for the big banks. And one other important thing I want to mention over here is, do we even still have a market? Can you even consider this a market when the Fed is going in and distorting everything. And I thought I had the article pulled up, but there was an article from Zero Hedge today where it mentioned, from Rabobank, the most important question investors should be asking themselves is there even still a market? And so a market has price discovery where there's buyers and sellers. And so, where that meets, there's eventually an equilibrium. And so, we overshot big time on the upside in terms of where the Dow and S&P should have been. But then when you take a look at how low things should go, they should go a lot lower. I mean, look at who things are benefit. Okay, they're trying to do things to keep the housing market afloat. But who's that keeping it afloat for? I mean, imagine if you're 27 years old, you're a millennial, you're trying to get your first job, and now you can't afford a house because they wanted to make sure all the baby boomers that they're going to be taken care of. But yet the average person out there, especially millennial, they're going to have a very hard time purchasing a home. So if you just actually what needs to happen is the rates need to go up. Then those rates going up would then pop a lot of these bubbles. You see all the bad actors then go out of business, and we need to have that shakeup. In 1907, there was a panic of 1907. It was way worse from a stock market crash perspective than even the Great Depression. But guess what? You never heard about it because they let the market correct itself, and then they didn't intervene into everything. And that was one of the reasons why we even have a Federal Reserve, is because at the time, J.P. Morgan had to go personally backstop the entire system. And he was like, well, this sucks. Why do I want to go take, my own personal funds and have to go, basically have to, insure losses? It'd be much better if we had a Federal Reserve, and the Federal Reserve could come in and, we'd own it too. So, I mean, that helps. And then we'd be able to get, all the gains on the way up. And if there's losses, we'll just put that on the Treasury. We see this yesterday or a couple days ago. There was an article that's been shared, pretty frequently, especially, amongst our circles, about how the Fed has been nationalized by the Treasury. And really, I mean, I'm not going to belabor this. You guys can watch the video from yesterday. I believe that was on the main We Are Change channel. And what we went over in that video is how, essentially the Treasury is in a first loss position, is the quote, meaning that if the banks make money from what they're doing right now, that they get to keep it. But if there's losses to be had, then we, the people, are the ones who end up getting stuck with that. I guess that probably comes as about no surprise to anybody. Now, who's also going to be making money throughout all this? And we already, talked about how, big pharma and the vaccines and the banks and the military and the energy companies now, and how, I mean, basically everybody, they're trying to make out better than this. But we have banks warn of chaotic launch of small business lending program. And this is something that should take like years for them to implement. This is, a huge undertaking. But what's going to happen is they're just going to have to send, basically everybody who applies a whole bunch of money. And there's probably going to be a bunch of fraud in this. And so we do see up on screen right now, $350 billion in loans to U.S. small businesses are part of this $2 trillion fiscal stimulus and what they're calling the Paycheck Protection Program. Sort of reminds you of like the plunge protection team. And we've also seen over here on screen, U.S. consumer comfort suffers biggest 2 weeks crash ever. MAGA, MAGA, MAGA. And then, we're getting back into the Dow going up because of Saudi and Russia are having a temporary truce. But, it's really only a temporary truce because things are going so bad that and there's really no demand that at a certain point, they could probably cut the oil down and still be at a level that is still going to be a very low oil price. Now, the last thing I want to mention about oil is I did see another program that was floated by the president where he had talked about what if there was a $50 import on all imported oil, and which would then essentially set a floor on $50 being the minimum price for oil. But then again, he also said he wanted to help out U.S. auto manufacturers. Well, are you helping out U.S. auto manufacturers by making sure it makes it more expensive for people to drive again? I don't know. Maybe that's when America was great again, Luke, is when it costs more money for people to drive. So.
Well, even if they cut the production, the use of it is still going to be insignificant, and you have to kind of ask yourself this question: will that even work? Will cutting production even help with the price? Since you look at the streets, I mean, they're absolutely abandoned. Like, you look at major cities, there's barely any cars running, especially not to the level that there was before, other than people just, going to the store or taking a break or just going for a little joyride there, because that seems like the only fun that they could have. And the UK government, by the way, they're punishing you for even doing that, being isolated in your own car. Yeah, the UK government has gone absolutely Orwellian, like it hasn't before. But is just absolutely insane there. But again, there's a lot of pain, there's a lot of suffering, and to have the government pounding its chest, helping out the biggest industries, meanwhile, there's all this pain and suffering still going on with the average person, the person in the lower class, the evaporating middle class. I mean, just helping out the upper class. I mean, come on. And definitely not something that should be cheerleaded in this kind of phony Ponzi scheme economic system that we're all under, that, as we talked about yesterday, privatizes profits and gains, but socializes losses for the 0.1%. Not even the 1%, 0.1%, if that, of the individuals that are benefiting from this entire crisis, getting all the help, getting all the assistance that they can. Meanwhile, you don't get a bailout. Your retirement doesn't get a bailout. You just get screwed over. Tim, anything else you want to say before we go?
No, I think you did a good job, but I would just stress it's probably more akin to the 0.001%, not even the upper class. We're talking about the parasitic upper class. It's above all those people that you think of as upper class.
Yeah, exactly. Maybe 0.01, even lower than that. Who knows? But all we know is that the government definitely doesn't have your priorities straight, to say the least. That's our take on it. If you think we're wrong, let us know why in the comment section below. We always appreciate proper feedback and criticism, because we essentially work for you. Thank you guys again so much for watching. Stay tuned for more here on Change the News.